What's up, everybody? Today we're talking about gap insurance and why you might need it and why you might not. We're talking about guaranteed asset protection when you purchase and have a loan or a lease on a car for a long period of time. We're going to talk about this and then you can learn if you need it on your vehicle or if you don't need to have it at all. We're starting right now. Welcome back to the channel. Today we're going to talk about gap insurance and we're going to get right into it to talk about what does it cover. Guaranteed asset protection covers the gap between your car's actual cash value and what the insurance company is willing to pay out if your car is lost, meaning stolen, total loss in an accident, or wind and hail destroys the car. If something like that happens and you owe 10 grand, and the actual cash value is $8,000, there's a $2,000 gap. Gap insurance covers that gap. Why does gap insurance exist? Well, lots of times people take a car that they already owe money and roll it into another loan. That can cause a huge negative equity situation, which will definitely leave a gap if the car is total. Sometimes you lease a vehicle and you may think all leases come with gap, and they don't. You should definitely be sure that you check your lease. Sometimes you wreck a car within the first year of having a lease, and then that car has a huge gap as well, which you need to have protection on. Or sometimes it exists because you have a loan with little money down, and you do a 60-month or a 72 or an 84-month loan, which creates long-term loan with quick depreciation, but the payoff on the car goes down a lot slower than you can pay it off. That's going to definitely create a gap as well. That's why this insurance is there for you. Now let's talk about who needs it and who doesn't. So if you're leasing a vehicle, like I said earlier, you should check with your leasing company to see if it has gap provided or if you need to purchase it for an extra cost before you start the lease. Also, those doing loans that are longer than 60 months with little cash down. People who also need gap are people who are rolling over negative equity from one loan to the other and financing again for a long period of time. That's when you're going to need gap. Gap is not necessary if you have a lot of cash down, like 20% of the value of the vehicle or more, or if you're doing a very short-term loan of, let's say, 36 months or less, or if you're a cash buyer. Okay, let's talk about how it works and what it won't cover. So if you take out a loan on a vehicle and have gap insurance and you are in the long-term loan and you end up totaling that car, it's stolen, or it's wiped out, you will have an insurance payout on that vehicle that will be for the actual cash value of the vehicle. Now, if you didn't have a lot of down payment, you're probably going to find yourself in a negative equity situation. So the bank is going to want their $20,000 that you owe. The insurance company is going to pay the actual cash value of, let's say, $15,000. And then the gap insurance will cover that gap of $5,000. That's why you want that in place. What it doesn't cover are repairs or anything that your regular insurance would cover. Gap is normally a very low cost, so it's not for covering the total loss of the vehicle or repairing or maintaining the vehicle. Only the gap. Okay, so where can you get gap insurance? If you're buying a car from a dealer, definitely ask them when you're signing your closing documents before you sign them to make sure that it's available if you're doing a long-term loan. You can also check with your insurance company or the lender that's providing you the loan. So let's talk a little bit about the cost of gap. Gap is one of the least expensive insurances that you can buy. It usually ranges between $400 and $700 for the entire life of the loan. Even if you have an 84-month loan, you will pay that charge once, they add it to your loan, and you won't have to worry about it for the life of the loan. It's unlimited mileage, and it just stops at the last payment you make on that actual loan. In Colorado, gap insurance is not a profit center for dealerships. The most that dealers are making on gap insurance is $100 to $200, so it's not something you should be afraid of looking at to protect your asset. In other states, I don't know, like Texas, Arizona, wherever you may live, you should check and see. But normally, gap insurance on any loan you do is going to be between $400 and $700. So if you've been thinking about buying a car and you've heard this thing, gap insurance, I can tell you this as well. It's something that I've been paying a lot closer attention to as the market continues to move. I've noticed that a couple of my friends have lost their cars to total losses after accidents. And what I'm not happy with is what the insurance companies are paying out on these claims. I looked at one deal where the car's retail value was about $17,000, and that client actually received about $13,000 cash value. And it makes sense because they're like, we're going to pay what another dealer would pay for your car, which I find to be very unfortunate for consumers. So if you had a loan that you still owed $17,000 on, guess what? You're going to have a gap of about $4,000. So if you've been leery of it or you think it's a scam, I just want to make this video so that you could understand it a little bit better. It could definitely protect your asset and protect a major loss if you end up in a total loss with your vehicle. So as usual, I'm Ronnie Haskins. If you've got questions or comments, please drop them in the DM. And if you have other information to add, we'd like to hear about it as well. I hope you guys have a great day.